Welcome to our call. My name is Bernadette Stevens and I will be your MC for this morning. Before we commence, I'd like to quickly go through our disclaimer. I won't be reading through the entire body, but this serves as a reminder that whilst due care has been taken in the preparation of the following material, this serves as a general background information about Liva Group. It is in the form of a summary and does not purport to be complete. The information given and presented should not be considered as advice. Readers are cautioned not to place undue reliance on forward-looking statements. While due care has been used in the preparation of forecasts and hypothetical examples, these are subject to uncertainty and contingencies outside of Liva's control. Today's agenda will consist of the following. Firstly, we'll go through the first year of Liva, followed by the 2024 financial highlights, and then finally looking beyond and plans ahead, and we'll then open the floor to Q&A. I'd now like to welcome you to the presenters and the representatives for today, the leadership team of Liva Group. And with that, I will now hand over to Liva Group CEO, Martin.
Thank you very much and good morning, everybody. Thank you for joining us for the session today. And it's definitely an interesting, I would say, half year, because as Bernadette has highlighted, it's the first year of Liva being full force. We're just celebrating our first anniversary, but at the same time, we had also, I would say, challenges from markets, from weather events and others, which we are going to share with you. So looking forward for an interesting and good session. Now, again, for the purpose of framing also where we are coming from and what Liva stands for, I would like to quickly come back to what we shared with you before in previous sessions as well. And who is Liva and how are we driven? What are our values? And clearly, when we built Liva, when we founded Liva, we said we are purpose-led. We are here really for a core reason to exist, to come to work every day, but be here for our customers. And that's built around the theme and the instilled confidence in people that they can live the life they want, knowing what they have with us, that we have their backs and we cover them. And that was a theme which we defined a year ago, not knowing that it would be tested as much as it was in the first year. Through claims, through changes, through evolutions as Liva Group. But this is something which is, and it is for us very much in the core and in the center of every moment. We also defined at the time building blocks like the dynamic model. And we always said we are not only defining Liva as a pure insurer where we take risk and rest on it. We are beyond insurance. We're looking at things that we can service customers wider, where we can build ecosystems. And to achieve this, but also to deliver really good service to our customers, we always said we need to be agile. And agile means is flexible on how we were being adaptive, making decisions quick and move on to the next level and say, good is not good enough. How can we move further? Which is an ambition, which is also driving us. But the other part, which we also always look at, and that's a constant, I would say, journey we are on, is embracing innovation. It is investing in technology, but it's not only just the technology, it's digital enhancement, it's the way we look at the business, the way we look at how can we improve the service to our customers, but also to all the partners and stakeholders. How can we make sure claims processes, or be it fraud, waste, abuse in the medical system, is there AI which we can embed to make sure that we are really protecting the insureds against undue use of claims. So that's where the innovation is also part of the DNA, which has been set at the very outset of Liva Group when we started. And I would have said has been tested at times during the first year, but we are very much believing that was very good and is the right direction we are on to be a purpose-led organization. Now, as I mentioned, Liva is 1 year old, so it's still fresh and young, but having said so, obviously, Liva has also a history before Liva was founded. But even when we are now looking at Liva in this 1 year, a lot happened. And again, we put a lot on the slides. We had to take a few things off because it was too crowded. But what you can see, many things happened. And now for the purpose of today, I highlighted 2 or 3 elements which I really believe are quite important for the investment community, for shareholders, for the market. For example, we achieved a 62% growth over the past 10 years. And again, we are in profitability levels, we increase profitability levels. You will see even half year, despite challenges, the underlying business performance is increasing. All the entities which are now across the GCC are performing and are increasing, which is very, very good and very positive, because that's, of course, what we are here for, to build a sustainable and good business. But also, we had businesses, for example, in Saudi Arabia, we secured Banque Saudi Fransi, a partnership, which again is a next step for us to widen our distribution through bank assurance, through other partners, which is very much the DNA of our company and also part of our strategy to really work with partners and build systems for their customers, which are significant developments for us as a group, but also within individual countries. Or you might have read about it, we just signed an MOU with Malaf Insurance in Saudi Arabia, where we intend to explore now the potential of a merger of our operations. That on the back, where we have a solid operation in Liva KSA, but mainly driven by P&C and there on the motor side. Malaf is very strong on the health side, which is as a group for us, of course, a segment which we are there. And I will later on quickly summarize or recall the strategy, and you will see our first pillar in the strategy is always to be a multi-line player across all the key markets. And that's where, for example, in Saudi Arabia, I haven't been active in the health space, and a transaction with Malaf could bring us to the next level there. Many other things happened in the year. Again, there could be many, many other elements there, but I have to say, I'm really proud of what we achieved, what the teams achieved, because a year ago, we really were just coming together as 2 companies, National Life and General Insurance, RSA Middle East. We came out as Liva, Liva is born, and then went through the journey. And now today, it really feels it's a group. The integration was led by Dr. Dafer and the team very successfully across all the markets, which is no easy thing. While we grew, while we increased the underlying performance. And again, that's a great achievement over the past year. Now, again, and I mentioned before that there was obviously a life before Liva was born, and there is a legacy and also the experience. And we just pulled out a few elements which are quite important, and you have heard, and you will hear while we go through today's presentation. But also, for me, always very important, I said, we are a purpose-led organization. To be purpose-led, you need to live by values. And what you see on the bottom are our core values: agile, ambitious, acceptive, and accountable. And all of them have been tested, I would say, sometimes beyond what we expected when we set them up. But they have really served us extremely well as a guidance through the times in the last year. But again, where we are looking from, where we are coming, we are seeing strong growth in core markets. We are obviously a leader in Oman. We're seeing development which is very positive on the business side in the UAE. Be it in existing business line, new products, new partnerships lining up. Again, revenues are growing. We see an increase. A lot of transactions helped us to really push for the next level. But also, I mentioned the successful integration helped us really to come together as one Liva. And that means multiple markets. It's not just Oman, or it's not just the UAE. It's also KSA. It's also Kuwait. It's also what we're doing in Bahrain. And some businesses we started to facilitate through our rep office in Qatar. So again, that's the building the brand, building the awareness, connecting with the market, and having a differentiation is very important. The other part, which again, very important to remind us, and you will see this in the presentation as well, we are committed to full transparency. We are sharing the things as we see them. We are openly communicating and working with our partners, be it on a policy which is not performing, be it on difficult claims, or also with our shareholders, how we assess the situation, how we are assessing the market. So the transparency is really important. This is part of our DNA, which is going back to being accountable. We are accountable, but we are also here for the long. So there's no shortcut. There's no way in hiding things. We are explaining things as we see them, even if it's maybe different than what other players are doing, or other insurance companies are doing, or other investors would do. Now, the technical efficiencies, and I would say there are two parts to it, which is also a bit linked to the legacy and experience. Technical efficiency means we are a technical company. That means we are in insurance business to run insurance business. We are not here to primarily generate funds to make investment returns, and we are not caring about the insurance business. That's where we are really monitoring very, very closely the development of our underlying businesses. That means also when we look at reinsurance and other models, we are taking more risks, because in good years, we want to retain more. Of course, in bad years, that means we also retain more of the claims. But we are here with our 1,200 employees to really make sure we are technically proficient, and we are not just underwriter, and we are not just professional in claims. We also have risk engineers, which are engineers going out looking at risks. We have specialists on reinsurance, we have specialists in finance, we have specialists in building all the various parts. And that's very much important because, again, it's part of our DNA, it's part of our ambition. It's clearly for us the foundation for the long, to run a business which allows us then to grow on, which is a foundation which is there. And that's what I said, it's linked also to the legacy where we're coming out. We have a very entrepreneurial spirit, which you see in the agility, also in the high ambition we drive, but also combined with the technical expertise of a global player like RSA, where we kept guidelines and updated them. We're using similar governance system. We made sure that we are building up the capabilities according to the expectation, for example, in risk management, in audit, in all the parts to ensure that this is really a sustainable long journey we are on. And last but not least, which I also would like to highlight, is the flexibility. Because for me, the key driver, and what I'm hearing from most of our partners who are brokers, banks, or customers directly, is the flexibility, sitting at the table, having a discussion, saying, look, that's what we have to fix. And the people you have here from Liva today, they are the decision makers. We are working very closely to make sure we are flexible, we are fast, we respond, we learn from it, we move on and take decisions. And that again goes back for me, accountability, being ambitious, being also acceptive that the world is not always turning the way we want, but we need to bring really the value, bring the purpose to life, which we set, which I shared with you just on the slide before. So these are all the elements which I just wanted to reiterate before we then also go into the financial side of things, because again, you might see things differently presented, how Liva, how we are looking at it, but that's very important to understand the backdrop of it. Very good. Arjun, if you can move to the next slide. And maybe this one, I hand over to Dr. Duffer, who can quickly share with you the GCC footprint a bit in more details. Over to you, Dr. Duffer.
Thank you, Martin, and thank you all for being here. Well, overall, we are focused on our main goal of being among the top pan-GCC multi-line insurance group is obviously always at our site. Over the past year, we have been building trust among a growing customer base and scaling upwards in a market filled with opportunities, proudly serving more than 1.5 million customers across the region. We are always and continuously looking at organic and inorganic growth opportunities, some of which Martin has alluded to. In this slide, I'll just have a quick highlight of what has been happening generally in the region. Starting with our base in Oman, we are celebrating very soon a 1-year anniversary since the portfolio transfer of Liva Oman, leading the operations in Oman under Hannah's leadership. We continue to lead the market with innovative solutions to protect our customers and remain number one. We have achieved significant increase in GWP, more than 300% compared to the same period last year. Growth is driven obviously by integration, but also expanding and many other initiatives that have happened, expanding our product offering and enhanced distribution channels. PAT has doubled, the highest rate when it comes to customers, which is a key focus, the highest rate of resolved cases at the FSA, and the remarkable 71% customer satisfaction rate in vehicle claims department. There is continuous enhancement of digital services and capabilities, resulting in an increase of more than 170% in leads and 100% plus 100%, 106% in increase in sales. We are still forging key partnerships among key players like Omantel, Thawani, and others. When it comes to the UAE, obviously, this is a promising and key market for us. It's a growing market. We have achieved strong diversification and robust growth in both personal and commercial lines. Customers also focus in the medical services. We've partnered with IO Health, an AI-driven platform that will change the experience and the journey of our health service sector, our insurance products, and there are other partnerships being discussed in the pipeline and hopefully will be announced very soon. Kuwait and Bahrain have been steady. In Kuwait, the business has grown to 6 million, a book which is poised to further scalable growth with the addition of commercial lines this year. And the GWP has actually almost doubled since a few years ago. Saudi, the promising market, the growing market, our commitment to grow in Saudi is continuous inorganically and organically. And we have just signed, as Martin mentioned, an MOU with Malad, and we are proceeding with the discussions to hopefully grow inorganically in Saudi. And on top of the performance and the turnaround story that Kamran's leadership and the management has achieved, our financial performance is very strong. Our results have increased more than 380%, and in investment income has increased more than 30% year on year. PAT more than 450% over the past year. We've secured key businesses with the likes of the Saudi Faransi Bank, which also Martin mentioned. Overall, you will get much more highlights on the financials when my colleague Ravi presents. But overall, our core business continues, to perform robustly. We are continuing to scale our business in segments and geographies. We are confident in our ability to significantly improve end-of-the-year results. So this is a quick snapshot, but I'm sure Ravi, who's going to take over, is going to take us into further details. So Ravi, please, the floor is yours.
Thank you. Thank you, Dr. Dafa. Good morning, everyone. In terms of the overall financial results for Liva Group for the first half of 2024, the overall insurance revenue, as was covered earlier, has increased by 3% from 152 million Omani Riyals in the corresponding period last year to 157 million Omani Riyals in the current period. While the overall net growth is 3%, but there have been some segments within the group where the growth has been substantially higher, and that is something that we have really pushed it hard given the favorable sort of market conditions. While at the same time, wherever the market conditions was, especially the pricing for some of our lines was not up to the expected mark, we've sort of slowed it down for now. However, as I said, the overall net increase for the group insurance revenue is 3%. As was mentioned by Martin earlier, this has been a challenging first half for us, especially because of the weather events that was witnessed, particularly in UAE, where the insurance service losses were to the extent of $3 billion, as has been published by some of the experts in this field. It did impact our Liva Group UAE results as well, as a result of which the insurance service result for the overall group, from 2 million Omani Riyals in the corresponding period last year has reduced to 80 million loss for the current period. However, excluding this, I'm pleased to confirm that the core momentum of the business is very, very strong and is actually much better than what has been witnessed in the previous year. So if we exclude the weather impact that we have witnessed, the overall insurance service result would have been 6 million Omani Riyals, representing an increase of 174%. And this basically shows the positive momentum that we are driving in our core markets and in our core underlying core business. Investment income, again, Dr. Dafa covered the substantial increase that we've seen in KSA market, and the trend has pretty much continued in UAE portfolio as well as in KSA portfolio. In Oman portfolio, overall investment income increased by 20% in the first half of this year compared to the corresponding period last year. and the overall investment income stood at 7 million Omani riyals for the first half this year. Coming to the profit after tax, as I said, while the weather has impacted the insurance service result and therefore the profit after tax, excluding the weather, the profit for the underlying core business would have been 8 million Omani riyals compared to a loss after tax of 1 million Omani riyals in the corresponding period last year. And last year we didn't have the impact of the weather as well. So this is basically to reflect you that the core markets and the core business that we are operating in, particularly in our commercial lines of business, personal lines of business, and life and health, there's been a very positive momentum. However, the results for the first half, as I said earlier, has been impacted by the one-off weather event, which was something that has not been witnessed in UAE for more than 100 years. In terms of the overall diversification, as we mentioned earlier, our strategy is to continue to drive the diversification of our portfolio in order to manage the volatility that the insurance business brings in. And continuing on the same journey, this slide basically reflects the further diversification that we have done, where UAE, again, continues to be the biggest in terms of the overall portfolio contribution to the overall insurance revenue, representing 59% of the 157 million for the first half compared to 51% that was reported in the corresponding period last year. KSA is contributing 14% to the overall revenue, while it has reduced compared to the overall contribution that KSA business contributed in the corresponding period last year. But this was a very conscious decision that was taken given the market condition to not participate in the price wars that was particularly going on in the motor market there, so as to protect the profitability of the business. And I'm pleased to confirm that KSA business at an underwriting level itself has actually improved the overall loss ratio by 10% and reported an underwriting profit in addition to the investment income that was reported earlier. Similarly, again, Oman's contribution to the overall insurance revenue has reduced 25% compared to 28% in the corresponding period last year, despite significant growth in the overall top line, as was reported by Dr. Dafar earlier. However, given the higher growth of UAE, UAE has a major share, and Oman, continues to contribute 25% to the overall insurance revenue. Can move to the next slide, please. Yeah. So again, the earlier I covered the product, the geographical diversification of the portfolio, and in this slide, we are presenting the line of business, diversification that we are continuously, working on, where medical, which prior to the acquisition and the combination of both entities, represented more than 80% of the overall top line to the business, which gradually reduced after the acquisition and was at 50% in the corresponding period last year in 2023, which has further reduced now to 48%. And the rest of the segments, particularly the commercial lines of business, has continued to increase and contribute further towards our product diversification, as well as to the, in terms of managing the overall volatility that the insurance business brings. Commercial lines of business now represents 18% of the overall commercial lines. I mean, non-motor business represents 18% compared to 16% in the corresponding period last year. And motor business, again, has been pretty much steady at 31%. Yeah. So in this slide, again, given the weather impact, we have been very, very active in terms of managing our claims processes. I'm glad to confirm, despite the significant increase in the claims, particularly in UAE, the company has stepped up to meet its commitments to its customer. And that being said, while it had a one-off financial impact, we have taken some measures to make sure that going forward, the impact could be minimized. So in terms of the overall long-term strategy that we have in place, we have emerged from this unprecedented series of events that has occurred in the first half of this year, and we continue to remain resilient. Our solvency continues to be strong despite a significant impact on the financial performance of the first half, and we continue to look for growth opportunities to to further grow our business, particularly in the second half and in the years to come. Again, as I said, here basically we just wanted to give you a view as to how we are looking at managing our business going forward in view of the weather impact and some of the other opportunities that we have seen. Again, reinsurance model that we have in place was significantly tested, as a result of the significant weather event that we had. And I'm glad to confirm that the reinsurance structure has remained resilient. And this weather impact actually gave us an opportunity to look at further optimizing and further enhancing our reinsurance cover that we have. And, I'm glad to confirm that we have, again, renewed our reinsurance treaties as of 1st of July, which was subsequent to the period end, with better expansion, with reasonably lower cost, and, to make sure that if an event like this occurs again, the overall impact that the business will have will be much lower than what we have witnessed in the first half. In addition to the reinsurance that we've looked at, we've also looked at our product proposition. We have looked at the digital capabilities that will further enhance our overall insurance revenue by focusing on those areas, making it much more easier for our customers to approach and to have an overall much better experience of the insurance journey. Again, in terms of the core business strength, as I said, robust performance, ex-weather, diversification, scale, strategy continues to be the main focus for us, and we continue to grow our segments and the geographies that we are currently operating on, which in turn will enable the growth, extending the regional footprint and strengthening our presence in key and high opportunity markets. As was mentioned earlier, again, KSA presents significant opportunities for our group, and we're very focused in terms of making sure that we're growing both organically as well as looking at inorganic opportunities to further enhance the top line, as well as bring in further profitability to the overall group. Again, we've also looked at the overall structure. We did the combination last year. We came up with a structure, to suit the requirements to enable us to efficiently go through the integration process while focusing on our core businesses. We are, on an ongoing basis, revisiting the structure to make it more agile and to make sure that the group is prepared to take any risks and it is in a position to exploit all the market opportunities that are currently available to insurance in the sectors and in the markets that we currently operate in. The idea and the strategy is to create long-term value to our shareholders and to our investors. So with that, I'll hand it back to Martin to cover his thoughts on the way forward for the group.
Yeah, thank you so much, Ravi, and I think you summarized it well, because I think what is really important to see what Ravi just summarized, and 2 or 3 points in my mind I really would like to stress. Number one, again, insurance by nature is volatile, and the volatility is seen across, I would say, any insurance businesses, and that's what Ravi explained with weathers and other impacts, which is just the nature of insurance and global insurance markets, which we need to accept. Of course, we need to prepare through reinsurance and other matters. But for us, as Ravi also explained, I think it's really our strategy has proven right. We have been diversified, we have been pushed in making sure that we achieve diversification. And when you look at, for example, the digital capabilities, we had it there on one of the slides. Even just Saudi Arabia, we have around 300,000 retail customers who are fully digitally served. And also the serving now, we set up service centers for customers when they have claims or other needs. So this is really a diversification. And you have heard us saying, and you must probably hear us saying it 2 or 3 more times through the presentation, the underlying business really shifted and changed. Yes, there is the weather, and we learned a lot from the weather. We changed a lot of the processes, and we took it as a really good learning, improving, as Ravi mentioned, on the reinsurance side or also on the technical side. And again, Guido would be happy most probably to go deeper, but for example, changing in underwriting philosophy, changing in risk management advisory to the customers, which then again leads to the strategy, which I just take you through in a second, really reconfirmed we want to be here for the customer to help them to take risks and move on. But that means also now that we learned, for example, what rain impacts can be. How can they avoid claims? How can they structure different? A hospital, for example, might not want to have a radiology department on the ground floor, which many had, unfortunately. All these kind of things through our risk engineering, we can help them to improve. And that's where we are also measuring it. You heard me saying before, the technical excellency, which is really important. And you saw maybe flying by one comment that if we had the same events today, even through all the technical and the advisory measurements, we're already seeing a 30% reduction of potential claims. And then we have reinsurance, where with agility, we are looking at the right reinsurance structure. So that's really a lot of learning. And again, going back to the values which I shared with you at the beginning, the agility, good is not good enough, and moving on. Now, just to remind you, again, we shared this before with you, but again, it is quite important when I look then ahead what we are doing in the next few months and quarters to come, but also for 2025 and beyond. Our strategy, again, it's purpose-driven, and I shared this before. Now, the clear definition, and that's all on one page, basically the strategy, but the purpose is really to instill the confidence in people to live the life they want, fully prepared for the unexpected. And again, we just talked about unexpected volatility and the elements and how we learn through it and how we bring people back on their feet in no time. But also with the growth, with the development, with the investment, with the transformation to become and be a leading multi-line insurance company, delivering value to customers beyond insurance. So again, I talked about advising our customers how they can improve their risk profile, avoid claims, and sustainable and profitable earnings to our shareholders. That's really the ambition we are heading, and it's still very much our guiding principle where we are following. We identified 4 strategic pillars for the group, which then again are embedded in all the operating entities. From left to right, market-leading multi-line, multi-country, and multi-segmented insurer. And you will see me talking in the next slide about that we change segmentation. We try to go in different segments in different markets. There's mandatory health coming again. These are segmentations which we want to address differently across different markets. Then we want to be modular and agile, and modular means also that we use things which we invented somewhere and bring them into other markets. For example, the technology which supports Saudi Arabia on the motor side was one originally developed in the UAE, which allowed then Saudi Arabia to quickly scale up to the 300,000 customers I was just mentioning before. And that's something which, again, being part of Liva Group, where we then can be really agile and fast and reuse elements there. But also, I would say the strength of the group, buying reinsurance together, making sure that we have skill set and abilities across the group is very much part of this pillar. Then number 3, the differentiation of customer perception and also how we help them in the experience and how they deal with us. That's something which is quite important. I have to say, if I look at where we are heading, most probably this point as well as the last one have been the least, I would say, advanced, because again, through the integration, we focus mainly on the first 2. But again, there's a lot of happening, and I will share a few examples. Oman, for example, has done a lot in the customer journey improvements. So did we in Saudi Arabia. Also in the UAE, we saw good elements. Dr. Daffer talked about IO Health, which is, again, an AI-embedded application which helps the customers, not just for the claim, not just to find the right doctor, but also for critical illness, for example, to help them on the journey, to make sure that they are not having an incident, that they don't have to go to hospital, that we can help them before. And all these elements are there, which leads me to the last one, which is the diversification in non-insurance services through partnerships and vertical and integration. As you know, we already have a TPA, a third-party administrating entity in the UAE, in Aya, which again, we are refreshing, we are making sure that they're fit for purpose and see what we can do beyond the pure insurance servicing, but also our teams in India who are helping us to make sure we can do things not just in the pure insurance servicing element. As I said, there's more to come because we are working on a few things which will be on the 3rd and 4th pillar particularly. Now the enablers, and I'm not going through all of them, but again, all of them are on a journey of improvement, framing, making sure that we have the right policies and right procedures in place, be it around people and culture, technology, then also the multi-line, multi-country value proposition. We already secured multiple accounts, clients, which are across the GCC or even global. Again, there are very, very limited insurance companies in this region who are capable to offer solution to clients which are going outside of 1 or 2 territories. That's something which we are seeing is a great opportunity, and we are also global partners of global well-known insurance groups to service their clients into this region. Again, important there. Data and analytics, I would say most probably not much to say, because this is really the key, especially insurance, which is driven by data, which is driven by underwriting. But there is much more we are doing. Again, I talked about fraud, waste, abuse, AI usage for AI is obviously founded on data and analytics. But also we are looking into partnership synergies within the group, again, being Liva as a group and having our shareholders. But beyond that, again, looking into partnerships outside, and we talked about the integration, vertical integration, where we can say, how can we partner up? How can we make sure that we can build more service and better services for our customers? And that's not just in medical, this can be in motor, this can be in other parts, which is something which we are also driving and venturing into more and more. And the last point, again, all we do, it's the DNA, it needs to be obviously ESG compliant. And again, we are launching our first ESG report next year. We have the teams really working very committed and eagerly on it, because it's really very much important. Whatever we do needs to be sustainable, and sustainable on all the elements. And that's where for us, from the beginning, that was a key enabler, which we also wanted. Now, this was more a refresh or recalling what we did. Now, most probably you're saying, okay, can you share a bit more in details what is really happening, what's happening today, tomorrow? And I pulled together a few parts. And again, just to give you a flavor of what's going on. And we try to bring them in. This is by far not a complete list of all the initiatives, but it just gives you a bit a better understanding what we mean and how we are really implementing the strategic roadmap which we are on. So on one side, the point of diversification and scale, which is of course very important. There's the life insurance business, which across the group, you saw when Ravi presented how we are segmented, it's quite small. We are just about to launch now life insurance in Saudi Arabia, retail through bank insurance, which is something we are working hard on the last tweaks, but again, together with our major shareholder, Riyadh Bank. And then again, we want to take this position beyond KSA, but even within KSA, we want to look to see how we can evolve it. And similar thoughts are happening in the UAE, similar thoughts are happening in other markets, because again, the demand with the change in, I would say, the environment for life insurance and pension insurance in some of the markets are quite high. P&C, for example, diversification. We are looking into different lines of business where we can enhance our offering, because again, we want to be partners to our customers. We don't want to say, oh, I only take care of your building. If you have directors and officer liability, okay, let's find a solution. Let's find a way that we can help you. Liabilities, you have marine, you transport your goods around. Let's make sure that we are becoming more holistic, but also geographically. We're setting up a team for commercial lines in Kuwait to make sure that we are close connected to the market. And we are working also beyond the GCC on some reinsurance inward, which helps us to diversify. The diversification leads me to the second block, the scaling up as well in the segments. When we looked at segments, and there is mandatory health in obviously Oman, which is something which we are well prepared. We have a network of 100 customer points which are ready to basically serve the customers, be there. But also in the UAE, the Northern Emirates, also mandatory health comes out. And KSA, we talked about the strategic moves where we believe health, which is the fastest growing and the largest segment, is something as a group of our size and ambition we need to look into. P&C, I talked about other products already. Again, Guido and the teams are looking how can we really enhance their offerings and going into elements which traditionally have been out, being energy and others, again, to make sure we are relevant to our customers, that we really help them to take the risks and support them on their journey. We're looking into key strategic partnership. This can be things like IO Health, that can also be partnerships where people say, look, I have a customer base and there's a lot of need of insurance or protection services. Again, something we are working very closely, and hopefully later this year we will be able to share with you some really great news on new partnerships. We are launching, quite excited on it. But the ones like Banque Saudi Fransi, Dr. Duffer mentioned, is also a great example which already happened, and there are more to come. Then the core propositions for me is also very much important, because that's really where you deliver all what you're saying and where you're going. And the digital enablement, which is very much linked to the customer centricity. So Oman did a big step forward in automating, digitalizing the journeys, make sure that the claims journey is better. You don't have to call up. You can see things are getting straight through, which is increasing times, but also transparency. And these are really important parts where we are there. Or look at the Saudi example. The 300,000 customers in Saudi Arabia, they have all been serviced digitally. So all is done digitally in a scalable model, which again is very much important for our growth strategy and propositions. And all this needs to be, which is the last block, the enhanced core technical competencies. And the word enhanced for me is important, because that goes back to the agility, and good is not good enough. We are constantly learning, we are constantly improving. And of course, we are learning from events like the rain, but also from trends in health, from trends in motor. And we want to make sure that we have underwriting improvements that we really can see, saying, okay, how do we do it different? And it's not only to make sure that the risk selection is better, but it's also what are the needs of our customers? How do we make sure that we have the right product for them, which goes back to segments, which goes back to proposition that differentiate, also being digitally enabled, being simple, being easy to deal with. As I mentioned before, risk engineering, personally, I'm very proud of, because again, quite often you forget that insurance companies are really the risk manager of society. We see where are all the exposure, and we see what can go wrong. But through risk engineering, we are here also to advise customers, saying, oh, maybe you should do this, or maybe you shouldn't do that. Why is the electricity on the floor? Put it half a meter up. So there are simple things which our risk advisor and risk engineering can do. And again, part of our DNA. And this is a constant learning through all the elements, not just on commercial, not just on personal, also on the health and life side. And at the end of the day, claims efficiency, and again, that has been proven. Of course, the numbers have been challenging, and Ravi shared this. But also, you can imagine the number of claims the teams had to address, has to manage through. That was really something which we learned a lot from. We see a lot of improvement we could do on the back of what happened in the UAE, which will be made available across the group. But that in itself, again, claims and claims efficiencies are important, which then goes also in negotiation with partnerships with, for example, providers on the hospital side or on the health side, but also the same on personal line side, through the volumes, through proper management, making sure that the claims are managed in a very good and efficient way. So again, you might feel, I want to say so much more because there's so much happening and it's always very difficult to summarize it. But this is really where I would say we start to see the implementation, we start to see the change, we start to see things really happening. And that's translating in what Ravi shared, the underlying performance, which is improving step by step by step. And that gives us the encouragement of saying, yes, we are on the right journey. There is volatility, part of insurance business. We have the balance sheet, we have the reinsurance, we have the support to get through. Did it change our way, how we look at the strategy? No, it didn't, because we know it's the right strategy. That's why we also took the step in Saudi Arabia. We keep on going on the journey we are on, because we are on the right journey. So that's, again, from my side, I think the last slide, if I'm not mistaken. And then we maybe hand back to Bernadette to moderate the Q&A and open for any questions that we can answer them.
Wonderful. Thank you, Martin. Thank you, Dr. Dafir, and thank you, Ravi. So as Martin said, I think we can now open the floor to Q&A.
I see Vision Capital.
Yes, we have
yes, please.
Please, somebody from Vision Capital.
That's right. Hi, am I audible?
Yes.
Good morning, team. This is Bishan Bhala from Vision Capital. Thank you for the presentation, quite detailed and insightful. Appreciate it. Just a few queries from my side. You explained sort of the business model. You explained the one-off event in Dubai. We understand, appreciate that. If you could just give us some sense of what sort of loss ratios you're dealing with now. I understand you're a multi-market player, so it wouldn't be prudent to just talk about Oman the way we do with some of the other insurance companies. But if you could just give us some sense with regards to Oman and generally across the region about sort of the loss ratios, the motor segment, about premiums, how they've evolved. Have you seen some uptake in premiums? I understand every market has different dynamics, but if you could just briefly give us some sort of ratios, some numbers, some key indicators.
Very good. Ravi, would you want to take it? And of course, Adil for sure is happy to add, and Hannah and others. But if you lay the ground and then we chip in.
Sure. Well, let me talk about the group, and then I will leave it to the segment heads and the respective CEOs to comment about their jurisdiction. So overall, again, one thing is very, very clear, as was shown in the numbers as well, in terms of the core momentum and the core business that we're talking about. From an underwriting perspective, which, as you know, under IFRS 17 is probably very closer to the insurance service margin, and the overall profitability, then including the investment income. So the trend has been positive compared to the last year. Again, last year, if you remember, we had a different set of challenges, the bodily injury issues, particularly in Oman, and some of the significant loss-making contracts. And all that was sort of addressed as we went along. And as a result of which, again, it'll be difficult for me to confirm the exact loss ratio because, as we discussed last time, IFRS 17, it's very difficult to come up with a loss ratio as such. But what I can confirm is the overall combined ratios for the group, ex weather, which, as I said, is something that impacted first half, has been on a significant positive trend. Our overall combined ratio is less than 100%, for the first half, ex weather, compared to a much higher combined ratio that the group had in the corresponding period last year. Does that answer your question on the group level?
It does at a group level. And if you could just sort of elaborate on some of the key contributors to that, because I would imagine the main moving part of that would be the loss ratio, right? If you could just sort of give us some flavor on the same.
Yeah. So as I mentioned earlier, again, KSA, as I said in the discussion, has turned into an underwriting profit with close to 10 basis point improvements from where it was in the corresponding period last year. Again, a significant turnaround, from a profitability perspective, despite a slightly lower top line, because as I mentioned earlier, we were very cautious and we wanted to protect the profitability of the business there, and we didn't want it to sort of enter into the price wars that was going on in a particular segment there. Coming to Oman, again, a very positive trends compared to the corresponding period last year, where bodily injuries and several other issues sort of impacted us. The inflationary impact of the medical business, etc. All that got addressed in the first half, and again, there's been a significant improvement, in terms of the overall loss ratios, as from an IFRS 4 perspective, and in the overall combined ratio, ex weather though, because Oman business also got impacted with the weather in the first half. UAE, again, for the PNC business, if I talk about the motor, I think our current loss ratios are where we really wanted it to be. It's in line with the planned loss ratios that we have for the motor business, again, ex weather. And similarly, the commercial lines of business also, which is typically the non-motor business, is again on a very, very positive trend. And the current loss ratios that we are seeing in UAE for the commercial lines is also in line with what we expect it to be, and where we really wanted to be, given that there's been a significant growth that's coming in that particular business. Again, ex weather, significant improvement compared to the last year, and the loss ratio improvement obviously is then coming and helping us in terms of the overall combined ratio as well.
Yeah,
sorry.
Please go ahead. Yeah.
Just to add to what Ravi was saying, one of the things we're seeing in the UAE business, where we have a large motor portfolio, is in the second half of the year, we've seen average premiums increase by almost 30%. And that was a portfolio where we already had quite stable loss ratios. So we only see in the next 12 months the loss ratios improving in one of our larger markets because of the market conditions, and that's been one of the outcomes after the rains. So a lot of our competition has also driven up rates, and we expect to see our loss ratios improve in the motor segment in the UAE.
So if I may interrupt, you mentioned premiums were up by 30% in UAE post the event that took place, right?
Correct, yeah.
Wouldn't the corresponding reinsurance rates also have spiked up? Or are they exactly what they were pre-event?
Let me maybe intervene on this. Good morning, everyone. This is Guido Zagatti. Certainly the insurance rates have, post events rate increased for the old market. We have been able to manage, probably due to the reinsurance structure, we actually have implemented the increase, and actually on a basically risk-adjusted base. So basically taking a movement of our exposure, a portion to the way it was last year, we have actually been able to achieve a discount of roughly 15% on the non-motor business and on 15% increase on the motor one, but for the main reason that we have purchased higher capacity than last year. So for our side, the increasing rate that we're seeing underlying in our business, both in motor, as others described, but also in non-motor commercial line, we've seen a similar increase of 20-30% since the event occurred. Actually, we have achieved more favorable terms rather compared to the increase that we're able to extract, the value we're able to extract from our customer. So overall, the trajectory looks fine because the underlying business is somehow inflating, the premium base is inflating, while the insurance is still kept in check.
Right, okay, glad to hear that. That makes sense. Now, let's say 12 months down the line, there are no further events. Would premiums revert back to normal levels, or how long can you keep them at sort of these inflated levels of the...
For commercial line, well, certainly...
But obviously, we have high premium based on the claims, but 12 months down the line, there are no further claims, then how does it work?
I think, well, in any market, obviously, insurance market is driven by large claims. Now, every time there is a large claim, there is an increase, obviously, of terms and conditions. So it is natural that if the next year will be benign, the market trend on price will start decreasing. There are those certain factors that have been achieved, which is not just rates, it's also protecting the underlying business by implementing appropriate natural catastrophe deductible, which have never been present in the region since now, which actually will be able in a similar event to reduce 10 to 15% of a gross just by applying the new level of deductible. Those we believe are there to stay. So the market is still and will remain sounder than it was prior to the event.
Noted. Thank you for that. We have probably 5 minutes before the next call begins, so I'll just stick to 2 last questions. If you could just give us some flavor in terms of the premium movement in Oman specifically, because that helps us with the rest of the sector. And then on the investment book, sort of, we're still witnessing high interest rates, but let's say 12 months down the line, once interest rates start to drop, what sort of equity debt allocation do you see? Are you comfortable with current levels? Do you see more allocation towards equity markets once interest rates start falling, or is that a discussion one can have in subsequent quarterly calls? Thank you.
Okay, so I'll just cover the premium rates for Oman. So the personal lines premium rates have fallen circa 10% compared to prior year. Obviously, we've corrected our portfolios from younger drivers, which was one of the major causes of the bodily injuries that are coming through. Loss ratios are trending as per our plan. There have been an adverse movement in the BI. However, currently a loss ratio is improving. Now, overall, we expect the personal lines business to improve. So overall, less than 75% loss ratio is planned for the future. Now, premium rates increases are expected to going forward. Several sort of discussions and reporting is happening with the FSA in regards to that. And we are hoping that this would improve profitability in the motor segment going forward.
Noted. And sorry, if I may just add in over there, I understand that IFRS 17 has a different reporting structure, but if I'm not mistaken, insurance companies are still maintaining their books as per IFRS 4. So you do have a sense of the sort of priorly calculated combined ratio, loss ratio, commission ratio, and you present numbers in IFRS 17 format, but you do have the old sort of format reporting as well. So what's the loss ratio for first half for Oman as per, let's say, IFRS 4 in your books?
So you mean for the overall Oman book?
Yes, Oman specifically, and for the group as well, as per IFRS 4.
Right. So actually, the overall loss ratio for the first half of Oman portfolio is in the range of 70 to 74%. So that's basically the broad range of the loss ratio. And again, as I said, significant improvement compared to the last year, where the similar in the corresponding period last year, the loss ratio was slightly higher than 80%.
Noted. And if you could just address the question on the investment book, thank you.
Sorry, I didn't get the question on investment book.
Sure.
Can
If you could just
that?
give us some, if I look at, Liva's fixed income and equity split, let's say 2-3 years back, it was probably 90-10. I think at the end of 23, if I'm not mistaken, it was 75-25. You've obviously had a growing book as well. Now, in terms of, most of the investments on the fixed income side, given the higher interest rates, which insurance companies are able to capitalize on, going forward over let's say the next 12 months, as we anticipate rate cuts, do you see a high allocation towards equity? Are you comfortable with the current levels, or is that a discussion one can have in subsequent quarters when once you actually see the rate cuts? Because I would imagine you already deployed that money, so those would already yield you the higher rate for a significant amount of time.
Yeah. So obviously we've been closely watching and always working on the right strategy given the dynamic market conditions for the investment market, and particularly the interest rates. So just to answer your question, I think again, in addition to the fixed income, long-term fixed income securities that we had in our book, we also took the advantage of the higher fixed deposit rates that were available in the market last year, and that's one of the reasons why you see a significant increase in our overall investment income. Now, clearly, the fixed deposits, book is much shorter in terms in tenure compared to the longer fixed income securities, and obviously they keep coming up for further maturities, etc. And every time a significant fixed deposit is matured, we obviously look at what is the right sort of strategy for us to invest those matured funds. But to answer to your specific point in terms of the strategy that we will be adopting and the kind of portfolio mix that we are looking at, I mean, this is something that we are currently working on. Yes, there are some really exciting opportunities in the equity market, especially in KSA and UAE, and as well as in Oman, where a number of IPO opportunities are coming up, and they look attractive. But this is something that we are currently evaluating, and we are also seeking the help of some of the investment experts to help us with the overall strategy that we need to have to manage our overall investment return, especially given the current expectation of the Fed, where the rate cuts might start happening soon.
Right. Noted. Thank you so much. That's it from my side. Appreciate all the answers and wish you all the best.
Thank you, Bishan. Unfortunately, we are actually out of time. But for all who joined us today, I'd like to thank you all for your attention. If there are any further questions for the group, please do not hesitate to reach out to us. But unfortunately, we are out of time and we will be closing the meeting. Thank you so much.
Thank you very much for your time. Thank you.
Thank you.